I told you this would push silver down. Major banks panic. Even the biggest banks are shaking over this news. This is happening today, now. In this video, I'm going to break this down for you and show you why this is directly impacting the price of silver that we've been so excited about. This silver, I think give me some silver you could actually see. This silver that we've been loving with this bump in price the past few weeks. Now, this is from an article titled High Interest Rates Are Getting More Challenging for Even the Biggest Banks. And that's a shocking title. The article starts by saying, a key revenue source for three giant banks fell during the first 3 months of the year, showing that even the biggest financial institutions are struggling with the same challenges facing the rest of the industry as interest rates remain elevated. JP Morgan Chase, Wells Fargo, and Citigroup all said Friday that their net interest income dropped from the fourth quarter to the first quarter. It was down 4% at JP Morgan, 4% at Wells Fargo, and 2% at Citigroup. The article continues. Net interest income is a critical measure for many banks since it measures the difference between what banks can earn on their assets and pay out on their deposits. Now, listen close because this tells you exactly what's going on. Smaller banks have struggled to boost this measure over the last year as interest rates and deposit costs soared. Now there are some signs in the first quarter that high rates are starting to weigh on growth even at the nation's largest lenders. Now, we've heard plenty about regional banks and their struggle for growth. I mean, the word growth is not, we can't even use the word growth for regional banks. They're trying to just survive. They're trying to stay afloat as the rug was pulled out from them 4 weeks ago, maybe 5 weeks now, when their support ended, right? Remember, after Silicon Valley crashed, there was support put in place for these regional banks, but it was just a 1 year window. And that window is over. So now these regional banks are trying everything they can. I mean, they're so desperate to stay afloat that they're taking these loans that are set to mature as 2024 rolls out. These loans from the loans that are coming from commercial real estate, right? These empty office buildings, and those loans that are tied to commercial real estate are set to mature. And regional banks are taking those loans and they're trying to bundle them up with normal, healthy loans. Now, this should sound familiar to you. It should sound painfully familiar because that is exactly what happened during the great financial crisis, right? It's the same method, taking these unhealthy mortgages, well, at that time it was mortgages, but here we're looking at loans for commercial real estate and bundling it with just like it's a little hidden bomb in there. And they're selling those. They're trying to get people to go in on it. It's really scary. So we know that's happening with regional banks. And now these larger banks are seeing that they're being impacted also. Let's continue. This article, and if you're enjoying this content, please hit like and hit subscribe. Help to get this information out there. It really helps a lot. The article continues. JP Morgan said in a press release that its net interest income dropped due to deposit margin compression and lower deposit balances. Now, these are like CEO, this is CEO language. But if you really look at that phrase, lower deposit balances, people are not putting their money into savings. They're not putting their money into checking. They're using their funds to get by as these high interest rates are keeping everything elevated, right? So people are not having that savings to go back on. And of course, if you're a silver stacker like us, you're not putting your money in the bank at all. You're being your own bank and you're putting your money into this silver, like what I'm holding in my hand. That is glistening actually right there. We're putting our money into silver that has been showing this great return this past week and a half now, I guess. I shouldn't say the word return. Return sounds like an investment. And we stack silver. We don't look for an investment, of course. We look to store our wealth in a metal that will hold its wealth. I'm just showing you the sides there. It's a really cool shot. We store our wealth in a precious metal while everything else around us is struggling with interest rates and these elites making their decisions on their own that impacts everyone. We like to, of course, store our wealth in a hard asset in our own hands. And I'm gonna I'm going to get back to silver in a minute. I want to finish what this article says. The article says depositors are seeking out higher yields, of course, as they have at smaller banks and moving their money into products such as certificates of deposits where JP Morgan has to pay a higher rate. As customers move out of checking and savings, they may choose to go into CDs. This is from a CFO that's telling reporters. That means that the bank is paying more for the internal migration. That is a sort of deposits migration that we're expecting throughout 2024. They expect to see much more of this. It's still certainly true that the big banks are better positioned than their rivals to withstand a period of elevated interest rates, and that they will still be able to earn plenty of money from lending. Now, what this article is showing is that, yes, people are going into CDs. Some are actually going to treasuries, and that is good news in one way and bad news in another. The good news is that, sure, you go into these treasuries, you may get some return eventually, right? It can be, as long as the dollar stays afloat, you may get some return. But as inflation remains sticky, which everyone is seeing, that is completely, there's no argument there. Everyone is seeing that inflation is here and it's just sticking. As that happens, that impacts what you're getting back from your treasuries, because that's how treasuries work. Like the percentages are all based on the strength of the dollar. And if inflation is sticking, then you're not going to get a strong return. The bad news to that is that for us as silver stackers, as these interest rates remain where they are, and there's no cuts, right? At first, we were excited the past couple of weeks that we were going to get cuts coming in June. Now, even conservative estimates are looking at not even September, but December. That would leave, if we're lucky, that would leave one interest rate cut for 2024 if it happens in December. Now, what that means for us and silver that we stack and that we're so excited about is it shows that, and again, I'm not a financial advisor. I'm just a silver stacker. I'm just a guy that's been stacking silver for years and years. I'm telling you from my experience, that shows, and the history of silver shows us that silver is going to drop down again. Because when people put their money, when they're getting more of a return in another area, silver gets left behind. Same thing with gold. That's just how precious metals work. So yes, we're loving this big boost in silver that we're getting up around the $28 range. We're loving it. Everyone's very excited. People are still wanting to buy in. I'm still wanting to buy in, even though I am on a personal level. I'm holding off. I'm not going to buy until I see a drop. And I absolutely do see this impacting silver. This data that we're seeing from this article shows us that silver is ready for the correction, and that correction is coming. The scary part about this article is looking at the rest of 2024 and showing us that if, according to this article, if everything remains as it is, there's no changes throughout 2024, silver is going to drop back down, and we will be stagnant like we have been for the past painful 2 years of stagnation that we had with silver price, hovering between $22 and $24. Now, I don't see it dropping down that low, but I do see silver coming down to, I'd say, around 25 to hovering between $25 and $27 and remaining stagnant there, unfortunately. And I wouldn't feel that way, but this data in this article is showing us that things are going to remain the same through 2024. We don't see cuts coming the way we're hoping, and that is what's going to keep silver in that painful spot that we had it for the past 24 months. So is this a good time to go in and buy? I'm going to tell you my honest opinion, because this channel is not sponsored by any bullion dealer. I get to say whatever I want. If I feel like not buying silver, I get to say that clearly. And not many other silver stacking channels can say that. I think it's great that many channels have sponsors, but I'm not sponsored by bullion dealers. So I'll tell you, my answer is no. And my local coin shop, my local coin dealer, he even told me no yesterday when I went in there. He said, no, this is not the time to buy. Wait for that correction to happen. It always happens. Silver jumped up a couple of dollars. We're all excited about it, but it is not the time to buy. And I agree. I'm going to wait. I see a correction coming probably next week, maybe the end of next week. We'll see a correction coming. And that's the point where I say it's time to go in and buy. And right now I'm holding my dollars, and I'm happy with that. I'm waiting for that correction, and that's when absolutely I'm going to be jumping in and probably buying rounds. Maybe I'm eyeing a 10-ounce bar. Actually, I think that'll be my first purchase that I jump